Joining us, and let's go across to our expert for today, Ajay Srivastava of Dimensions Consulting joins us now. Ajay, hi, good morning. Is your enthusiasm in the banking space still intact, or has some of that dipped after the fall that we've seen in the last couple of weeks?
You had to ask the question today, Sonia, don't you?
Well, I remember what we spoke about the last time, so hence.
No, I think I still feel that at the end of the day, we discussed the fact that the growth rate at 6 to 7%, P's at 30s and 40s is a pretty unsustainable mix. That's one. Number two is, it's not necessarily that the fundamentals have given way overnight. It's also the structure of the market. Lots of margin call, lots of people getting out, lots of people not able to meet up the obligation on the middle, the mid-cap story that they have bought into. So it's a whole potent mix which is coming together of fundamentals on one side. That's one. And number two, of course, let's not forget, globally there is a problem in the market. And I think the takeaway from this whole last 3 days is that the whole concept called insularity of Indian market has been tested and found wanting. So I think Indian investing public must understand and accept that we are part of the global markets no matter what the politicians tell you, no matter what the central bank can tell you. We are part of the market. We will go up and down the way the global markets do.
Oh, absolutely. But would you bottom fish now, Ajay, for the simple reason that we are getting a lot of money into the mutual fund kitty and they will have to deploy it somewhere. So are we anywhere near the bottom? Is it time to fish or is it time to wait?
See, again, you got to be sectoral plays. The problem with and I've always maintained, history of last 20 years of equity investing has told us that when the actual retail money arrives, that's the time to exit the market in those sectors. That's a given. And always proved right, because this is the money chasing returns, not money investing for returns. I would still say that it's not about bottom fishing economy sectors. I would say please do not touch it. The power story, the mineral story, the reconstruction story of the economy, the roads, do not touch these stocks. These are not going to get revived. Your still safe havens are continue to be what we are speaking last 6 months, 1 year. If you look at it, those are the best havens that we have found. That's one, which is pharma and IT. Number two haven we found was market leaders. Even if this carnage, you look at the market leader in automobile, whether you look at Maruti, you look at Eicher, you look at all MRF, you look at all these stocks, they are not falling by the 10%, 20%. They are still where they are, or by and large in the zone. So when you say bottom fishing, I'm not able to get my good stocks at a good price even today because they haven't fallen enough.
Okay, I'll ask you about your stocks in a bit, Ajay, but I remember the last time when we spoke, the Chinese government had just devalued its currency, and you were the first one to get, quite worried and cautious about that. Do you think that that negative trigger has played out, or is there a lot more to go which could perhaps drag our markets lower as well?
I think lots more has to go, Sonia, for two reasons. One, globally, I think still things are not settling down because we are not knowing where it's going to end. Because the first round of yuan, the second round of devaluation has been met with other EMs also devaluing their currencies. The ringgit is down, the Indonesian rupiah is down, the Thai baht is down, Indian rupee is down. So, in a manner of speaking, the gap has now narrowed to the yuan devaluation benefit which China had. The question is, will it continue? And I think the central bank governor really said correctly yesterday, if they continue this process, there is more mayhem. The problem is not there. The problem is that our government response is too slow. It's just saying, okay, it's done, we think we should do something, let's think about it. It's just too slow. We need to respond much faster. So worry is that what's happening down the line, if the responses don't come through, this season is a washout. March 16 is a washout. And that's the worry.
So the place to hide, you began by saying pharma and IT. It stands to reason that there will be mutual fund managers with money. It stands to reason that there will be retail investors with savings, the usual savings. Do you go and buy the pharma stocks now, or do you think that the ferocity of this fall will enable people to buy things cheaper?
Okay, if I were to understand a question correctly, is Lata, two parts of the question. One is, can you or still buy pharma stocks? I am a firm believer you can buy pharma stocks anytime. The return horizon may expand or depending on an entry point.
Yep.
But in the next 10 years, you can buy pharma stocks anytime. Let's not time the market on pharma stocks. Okay. And the reasons for that. Structurally, the pharma market is consolidating globally, including in India. The returns are exceedingly much above return on equity, which you want from the market. And there are safe havens to the extent that they're not vitiated by imports, competing imports coming into the country. So in fact, we are better off by exporting out. So there are lots of positives going for the pharma story. So I think at any point of time, you could buy pharma. IT, we have been circumspect, but I think with the rupee devaluation steering us in another 2 rupees or 1.5 rupees more to go, I think they will have a big leg up in earnings. So you could take an opportunity cost of investing in IT, exit out in 6 to 9 or maybe 1 year time, but stick to the pharma story. The other part is, do you go into the mid caps and other stories which are falling by the day? And I keep saying that again and again, that our economy is not geared to address the valuation issues with those stocks. There is no turnaround happening. It's going to get worse. It's going to get more ugly, as most people thought ugly is over. You watch what happens next 6 to 9 months to these companies and the share and the economy. So I think you've got to be safely out of the place. It's not going to be bottom fishing. You might be just having the knife falling on you once again.
Okay. We can't handle so much pessimism as well, Ajay. But what do you think the downside for this market could be? I mean, we are at the lower end of our trading range. We're somewhere around 80 to 50 now. You think this 8,000 psychological mark will get protected this time, or could that be taken off as well?
I think Sonia, in my view, I think 8,000 will be taken out. And the reason I'm saying as follows. 3 reasons. One is, I see a certain lack of government response to the crisis which is emerging in the economy. The employment is falling, the economy is not stuttering around, if I want to say so. That's one. Number 2, if you have this one rank, one pension time bomb ticking away, that is accepted. Okay, you're looking at a big fiscal issue coming into the economy, which the rating agencies are going to look at very seriously. So if you got ORAP for one part, the rest of the government will jump in and say, all the government employees, they love it to say, give us more money. Okay, so that's going to be the fiscal problem will going to be acute. The third is, if and whenever we see the government able to spend the money, because I think fiscally they are still not in the mood to spend the money. Therefore, if this continues the way they are, I think there is a problem there. So question 8,000, I think it's a matter of what, 200 points now to go? That's all about it?
Yes.
So it's not such a, it looked very far away once upon a time, but it's looking right around the corner now.
Yes, you said it. Actually, this morning when Anuj was speaking about piercing 8,300, I thought we are at 8,372. Why is he so worried? And now, 8,250 got taken with such consummate ease. Your point is taken. I hope that one rank, one pension is not, doesn't become, such a big issue. I haven't done the math on that. I guess it's still getting done by several economists and statisticians. But some people, raise the scepter that you might even start looking like Greece. That would be the amount of pension payments as a percentage of your GDP. So I guess some careful calculations will be done before these are approved in a jiffy.
Lata, the markets are falling more
even
now.
Further.
So now the Nifty is down more than 400 points. And I just want to pull up the stock of Bharti Airtel. That one was under intense pressure yesterday and it's down about almost 5% today. Ajay, I want to put this question to you because, now with the way the rupee is depreciating, concerns have yet again emerged about these companies that have dollar-denominated debt and exposure on that front. How worried would you be about these names?
Very worried, except for the companies which can pass through the cost. And I think telecom companies are the one which will be able to pass through the cost. So, in an infrastructure company, in a cement company, etc., where you're not able to pass the cost, it's a big worry. But for sectors where you can pass the cost with quasi-monopoly status, I think there is less of a worry. It's a worry, of course, because it's a negative on the P&L account. But I think what's going to happen is that these companies are going to pass on the cost increases. You already saw yesterday a vehicle manufacturer, Maruti, increasing prices. You will see telecom rates going up, and definitely they will pass through the cost. So I think these companies will withstand this pressure of dollar devaluation much better than the companies borrowed for the basic sectors of the economy.
Okay, all around that 8240 mark, the big selling happened, gap down opening, and thereafter it's kind of found its feet over there for the moment. Of course, what are we talking about? 20 minutes of trading, that's all. But it's at least at this moment catching its breath. The Bank Nifty is quite clearly the worst performer with a 2% knock. But I dare say the PSU Bank Index is a lot worse at this point in time. That index is down 3.5%. So whatever little gains you saw in that stock at the time the capital infusion was announced and that huge reform press conference was held by the finance minister, all that bonhomie is getting wiped out with some alacrity. That's not the only space that is falling, but that is the place where the economic growth story and its disappointment is better expressed by selling off those stocks. We have been speaking with Ajay Srivastava of Dimensions Consulting. Ajay, is, next to the pharma and the IT stocks, usually a place to hide are the staples. You wouldn't like any of the consumer stocks now?
First of all, Lata, you should take more breaks if that helps the market to stabilize. I think we'll always welcome it.
Okay.
Okay. Having said that, I think, the staple is a funny kind of place to be because, yes, it is a place to hide, but a very expensive place to hide. So when you talk about market climb down, market cutback and all, they are still quoting at P's of 50s and thereabouts.
Yes.
So how do you hide in a place where you buy into at a P of 50s in a country which is expanding maybe at 4, 5, 6%? Very difficult. So I'm not sure it's the right place to hide because even if you're safe, let's assume the worst scenario is capital gets safe, I don't think the returns are going to happen. And whenever, we all know market will turn around, we will see an upside, we will see government interventions. Whenever that happens, these stocks are not going to be on the upside in a manner that the more high beta stocks will be. So I'm not really in the school of thought to say let's hide behind into a Nestle's and FMCG stocks and Hindustan Lever and ITC because they are just too expensive for right now, even after all the cuts.
So apart from IT and pharma that you just mentioned, where else do you see a safer opportunity?
Now, you'll be surprised if I tell you I think telecom is the right place to be because that's the next sunrise sector. You must be in this space
agree with
because
you.
that's going to become the... Okay, thank you, Lata. Even though the share price is falling of all the stocks, but I think I would still say that that's the right place to hide. I still believe that the right place to hide is
but aren't you worried about
market leader.
Aren't you worried about RelGeo and the disruption that RelGeo might create?
I know it's a parent company, but sorry, I think that's not going to be a consideration. Remember Reliance.com, it never factored in the scheme of things. Reliance Jio will not factor. This is consumer market. This is not an industrial market where you draw the pipe and expect people to come and draw water from the well. You got to literally take the water bottle to the guys. This is consumer business. And I think the franchise created by an Idea or an Airtel, everybody, is just too strong. And you have dealt with it. How many times do you change your numbers? How many times do you change subscribers? Only at the lowest strata of consumer? Yeah, that is possible. So I'm not too sure that it's a very serious competition is going to be from these people. I think these people have enough franchise to make their money. So, sorry for the geo part of it.
No, I take your point that, the payment bank license to many of the telecom companies could actually enable them to get stickiness at not too high a price. I mean, the bills that people were telling us to put up the payment bank was some $60 million and thereabouts. It didn't look like a very daunting number, the initial investment at least. It would be more investment in terms of understanding the business dynamics of something they don't know yet or how it will pan out. But that's an added... probably stickiness that the telecom companies might get, which was why I vociferously agreed with you. In the last 48, 72 hours, we have had so much of discussions on payment banks that it does look like the telecom companies have something good coming their way. Liquor stocks, such like discretionary buys, would you like those kinds of stocks at this stage?
Always a consumer and always a buyer, Lata. Very simple. I think, I think this country is trying to put prohibition all around us, but I think we will finally, we are the proverbial alligators and the crocodiles who will survive for millennia and will find our tipple. I think you're right, you named it correctly. These are the places where there is no competition because there is no newbody coming in. Now, if you look at the consumer space, the new brands are coming in, the e-commerce is taking place, the retail companies are putting their own products in the shelves. So if you see, the Big Bazaar format or the Pantaloon format or the Shopper Stop, you find they're putting their own products in the market, food products. They're not putting the big brands alone. So there is a competition there which is coming, and India is getting more, money-wise, I would say, not brand-conscious-wise, so they will face competition. So I think, yes, if no capacity is coming like liquor, you obviously got to be there. But consumer companies, I think, are going to face a tough competition as we go down. The last part is, and I think, this is must for every investor, including ourselves, discipline. The leaders will always win the battle in the end. And I think that's been borne out in this whole carnage that I named 5 stocks to you. And some of them I may have holdings or not, but I think they are market leaders who have tested the market for every single downturn and come out a winner. You look at last 5 crashes of the market, these 5 stocks, they have done fantastically well. So I think you got to stick with the winners, Lata, in this scenario. You're not going to bottom fish with the losers because this is not the place for them.
Yes, sir. Yeah, you want to ask a question?
No, just to follow up, you said the alcohol stocks, but they don't have, United Spirits doesn't have competition, but it does have many political, roadblocks, right? The latest is that Tamil Nadu might also become an anti-alcohol state. Wouldn't you be worried about that?
Yes, you're right, but let's take the present state, which are prohibition. I travel to those states as well. You find it all over the
find a
place.
way to get it.
Every single house has it. Every single house has a beautiful bar out there. That's so that's the reality of. Except it's a little more expensive to maintain the bar. That's all. So there's some middleman who makes extra money. So I'm not sure this prohibition concept works anywhere in the world. It's not worked. It's not going to work in India. But the concept is that if you don't allow supply, it's like the banking industry. Why it is so valuable franchise? Why the P's are 40? Because the reason was no competition. 2 banking licenses in 25 years. That's what RBI did to the system. Today, when the banking system is opening up, you watch what will happen to the private sector banks. Their valuation will go down because they're seeing a threat from payment banks. The small business banks going to come. 2 new banks are entering in the month of September. Things are hotting up. They lose people. They lose customers. Saving bank interest rates already announced by IDFC, if I'm not wrong, are going to be 0.5% higher than every other bank.
Yes.
So now you see what's happening in the market.
Oh, absolutely. Competition will hot up, and that's going to definitely take its toll on the banks, and that's why I guess another reason why banking shares are falling more. But stay with the leader, Ajay. Permit me that immodesty. Stay with the leader, stay with us. Thank you very much for joining us.
Thank you very much.
Okay, we have to take a break, but banks, there are several troubles coming for this sector in various ways, so we'll touch base with a couple of mid-cap bankers, Mr. R. Atmaram, the ED of Bank of Maharashtra, and Shyam Srinivasan, MD and CEO of Federal Bank, will be joining us in a minute.